Subscribe to the channel and press the bell icon to never miss any updates. Hey everyone, we have Sheldon Martin in the show, and today we are going to talk about different financial topics. What is happening in current financial situation like hyperinflation? We will talk about business related things, which is like a metaverse. What's the future of the metaverse? And we'll talk about US student debt and all the things regarding which is really crucial when it comes to 2022. So without any further ado, let us begin the podcast, and let me welcome Sheldon Martin, who is the second time guest in our
Yeah.
show. So welcome, Sheldon.
Yeah. Thanks for having me. Thanks for having me.
All right. So what are your thoughts on actually hyperinflation? Because we have been seeing hyperinflation all over the world because of the COVID. The government has been printing a lot of money, and
Mhm.
the government is giving away trillions of dollars
Mhm.
to the citizens, and because of that, we are seeing hyperinflation. So, what are your thoughts on that?
Yeah. So it's very interesting. I would say that the average human being that doesn't that's not in tune with finance and how I guess how the money works in the USA, hyperinflation is not a good thing. I mean, it needs to take place. Inflation is something that's normal, right? Inflation
Right.
takes place on a year-to-year basis for the most part, but typically the inflation rate usually is around 2 to 3%.
Yeah.
That's what it's averaged out around over the last 100 years or so. But when you have hyperinflation, the problem is that the inflation, we've been printing so much money with different stimuluses due to the COVID, that when we're printing money, the inflation rate has been growing at a rapid rate. And when
Right.
that happens, the problem is that all of the industries cannot keep up with the hyperinflation. So when I talk about industries, I'm talking about like salary, right? So typically
Right.
your average salary increase in the United States is 2 to 3% per year, as far as the salary increase. If
Right.
right now the inflation rate right now, as of now, 7.5%,
Right.
which nobody really knows is probably higher, then if you're only getting a 3% raise a year, that means that you're really not making, you're losing money each year because
Exactly.
your dollar doesn't have as much purchasing power. So hyperinflation to me is inflation is needed, but hyperinflation on this level is kind of extreme and kind of worrisome in my opinion.
Yeah, exactly. And when it comes to like house renting, the as inflation is rising
Oh,
rapidly, the owner of will definitely consider you know getting more money from tenants. So they
exactly.
would also prefer to go higher when it comes
Mhm.
to the rent amount.
Exactly. Not just rent, but your price of goods. So your food, your
Yeah.
clothes, like your necessities goes up. Your toiletries, everything goes up, and we're not making the increase in money that we should to be able to afford the inflation
Right.
rates of the products and services. So
Right.
yeah, yeah.
Do you feel that because of the hyperinflation, people in the United States would prefer to buy less products, or is it something like that?
So I mean, to be honest, really what we're seeing when you're looking at inflation, ideally, even though the majority of everything is going up, but it's really the necessity. So, like you said, the rent. For
Right.
instance, during the middle of the pandemic, just to give you perspective, I don't mind sharing. In San Diego, which is one of the most expensive rental markets in San Diego, California, the apartment I've been living in here since the middle of the pandemic. When I
Right.
first moved in, this place cost about 2,500 a month. Right now, I looked at how much it costs. It's basically 3,500 a month. So
Oh
they've
my
raised the
God.
prices $1,000 within a year just because of inflation and just because they feel as if people are back to work, so they can increase the prices. So I think that people are still going to continue to buy because it's on priorities such as food, groceries, clothes, rice, meats, and so forth. So they have to buy it because it's necessities.
But like, what about if the rent amount increase just like this, as you told, like in the San Diego, and the people who are middle class or lower middle class, how would they afford to live?
Yeah. So what a lot of people are doing is getting roommates. For instance, when
Right.
I have a roommate, my brother's my roommate. So a lot of people who are getting roommates, they're doing what they call house hacking. So house hacking is essentially where one person might buy a home. under their name, and they might buy a 4-bedroom home, and then they might find 3 friends to move in with them to pay their full mortgage. So basically, not only are they getting their mortgage paid for, they're also helping their friends out because it's affordable for them to live in this expensive city. So it's aligning interests. So that's what some people are doing, along with getting roommates and along with side hustles. A lot of people are finding side hustles as well.
Right. And what about, as you just said, that you moved at the middle of the pandemic, and but you had a choice to own a house, but you actually choose to rent. And what's the reason actually? Because the interest rates are really low, so you should have go for buying a house.
Yeah. So I think that when people think of real estate or a home, they misrepresent what it really is, right? So people think that owning a home is an investment. Owning a single family home is not an investment. An investment essentially is something that makes you money. The reason why people call a single family home an investment is because it grows in appreciation, meaning like the value of the home goes up over time. But the value of the home is going up over time because the inflation rate is increasing. So although you might think when you sell your home, maybe you bought your home at 500,000, 10 years from now, you sold it for $1 million. But in reality, that $1 million, your 500,000 with the inflation is probably worth $1 million in buying power as long as it grew with the inflation rate. So what becomes your real estate investment is when it's cash flowing, meaning that you're making some type of money from your investment, not only the appreciation side of it. So that's why people go towards the house hacking, which I just mentioned, where they make money off of renting each room, or they buy multifamily, where they buy like a duplex or a triplex or a quadplex, whatever the case may be. So that's why me personally, I didn't want to have, since this year I'm focusing on a lot of travel, I could get a property manager, but it's not super feasible for me to buy a property in San Diego at this time. It's super expensive. So I would rather buy it elsewhere, but I don't have the time to physically manage because this year my main focus is traveling, not necessarily building a real estate portfolio, if that makes sense.
Right. And also it requires a huge amount for like down payment, right? So it simply requires more money to, just for the down payment too. Or rather, you can just invest in dividend based stocks and get, what we call as a rental income. We can get this type of income from dividend.
Exactly. So to me, there's better investments that I can make. I mean, real estate, there's tons of people that became rich off of real estate, but that's not the only way to get wealth, right? Of course, I do want property and I do own property. I just don't do the physical work myself. I invest my money with real estate professionals that are very good in that industry, and I let them do all the work and I let my money work for me. But it's super risky to put down 80,000 on a house in San Diego when I can invest 80,000 in multiple different ventures and make a higher return at this point in time in my life with the flexibility. I like flexibility.
So, right.
Yeah.
So another thing that I would like to ask is that, do you invest in startups?
So at this time, I do not. I mean, I'm not opposed to it, but I would need to look at the financials. I would need to look at the business plan. I would need to look at their, I would need to look at a lot of information, but ideally I'm not a super risky person. Yes, I do take risks.
Right.
I do invest in, I'd rather take a risk and invest in some type of crypto or invest in, something that's proven like the Metaverse or NFT before I invest in a startup that I know nothing about.
So you can just give your money to venture capitalists and they can use the money like this. They can use your money for investing in startups and you get something like fraction of the startup. So are you planning to do this kind of thing in the future?
Like be a VC, like a venture capitalist?
Yes, actually there is there are companies like a venture capitalist. For example, we can say Sequoia Capital. Yeah, right. So you give money to them and they invest on behalf of you. So this is how the industry works.
Yeah. So I personally don't like the aspect because I've looked at different contracts for venture capitalists, and it always says there is no guarantee, which we all know investing has considerable risk. There is no guarantee, but there's some investments that your odds of winning are a lot higher due to the previous history, opposed to something like VC where they're investing in their vision, but I have no say so on what companies they're putting my money in. You know,
right. So you need your control over your money.
Yeah, I need a say so. That's why if I invest in a startup, I would rather probably invest in like a close friend or a close family member startup where I have some oversee of what's going on, opposed to some large VC, industry or company controlling all my money. So
trust matters the most.
Yeah, trust and yeah, I like the interpersonal relationship opposed to in this situation, at least in this
Right.
space where I'm giving my money to a startup. Yes.
Right. So
Yeah.
if we talk about like a real estate industry has been growing super duper rapidly in the United States and Canada
Hmm.
since the pandemic, right?
Hmm.
And in the rest of the world, the scenario is completely different. Like in the Europe and in Asia, there is very less demand for real estate
Yeah.
during the period like after the COVID, right? So,
Mm.
what do you think about what's the reason behind the massive growth of real estate in both the countries,
Yeah.
US and Canada? One reason we can say is interest rate. What's the
Yeah.
second
Yeah.
reason we can say?
Yeah. So interest rates, of course, that's the first one. The second reason I would say is FOMO. So fear of missing out,
Hmm.
especially in these what do you call emerging markets or markets that are already on fire, like San Diego, Southern California in general, San Diego, Los Angeles, San Francisco, all those areas, the prices are increasing so fast that people feel as if they're going to keep increasing. There's never going to be a bubble or a crash,
Right.
which you never know. Typically, based on history in the real estate market, there's going to be a bubble or some type of housing market decline every 10 years. It's been about 14
Yeah.
to 15 years and there hasn't been a decline. So people are
Right.
now thinking they're getting FOMO, fear of missing out, and they think that the prices are going to keep going up and this is
Right.
their only time. If they don't get in now, they're not going to get in. So
Right.
that's the
Right.
second reason outside of the interest rates being low.
Right. And do you think that as more and more immigrants are coming over there in the US and Canada, the price will keep increasing?
I mean, I think that so it just depends on which parts of Canada, which parts of the US. There it just depends on the market you're going to. I think that in Southern California, at least, just because that's where I live, so I can speak to it, the price is
Right.
always going to appreciate, always, because it's a hot market, it's warm, people want to get away from the cold, the
Right.
beaches. I can go on and on. So I know in SoCal, the price is always going to appreciate through time. And that pretty much goes with real estate in any hot market or emerging growing market. The price is always going to appreciate as long as it continues to have job stability. There's not
Mhm.
low job rates and so forth in that specific city. So
Right. Okay. So if I talk about like the city where I'm living right now, it's London,
mhm.
Ontario. It's
Okay, yeah, I'm
I'm in
familiar with it.
Canada. Sorry.
Mhm. I'm familiar with London. Mhm.
Okay, yeah. So I talked with one of the real estate agent, and he talked me that the historical return on investment in London's real estate market was like 3 to 4%. But
Okay.
since the pandemic, the scenario has completely changed, and the average return on investment is more than 20%.
Oh wow, wow.
So so it's a huge difference.
Yeah, that's
So
insane. It's insane, man. Yes,
and in Ontario overall, we are seeing the same kind of growth. When it comes to GTA, Toronto GTA, the growth is phenomenal,
yeah,
phenomenal more than the London's growth, right?
yep. Because London, that's about 45 minutes outside of Toronto, right?
No, it's one and a half hour.
Oh, 1.5 hours. Okay.
Yeah,
Okay. Yeah, I can see it. Right. So what we're seeing in San Diego is a lot of people are moving out the direct city. So like in Toronto, a lot of people are moving out Toronto because it's gotten so expensive, and they're moving to neighboring suburbs
right.
like your area.
Yeah,
Same San Diego. People are moving from San Diego. They're moving to areas like Temecula, which is about 45 minutes to an hour away because it's much cheaper, but you can get a lot more home for your money. You know what I mean?
right. So and everything is like people have been working at home, so it makes no sense to spend more money in expensive cities, right?
Exactly. It
Yeah.
makes no sense.
So if we shift our gear and talk about like metaverse, what do you think about metaverse? Is it like something specific that only Facebook is going to do, or like many other companies will jump into the industry? And what do you think about how the industry will grow?
Yeah. So there's actually already a bunch of companies that have patent pendings for different metaverse projects, right? So it's not just Facebook was like, they're one of the pioneers of it. That's why they literally changed
Right,
their name. They're going through a rebrand. But outside of Facebook, you have other companies like that are already buying real estate in these metaverses. You have other
right,
companies that are already, creating projects in these metaverses. So I personally think that it could be our future when you look at virtual reality, artificial intelligence, and different things like that. I feel like if you think about it, right, all the kids are playing video games. If you think
right,
about a video game, essentially it's a virtual reality. You're just not physically in the world. But imagine when all these kids are in the physical game, like where they can see it, they can feel it, they can feel the emotions on their body while being in the game. It's worrisome to me, to be honest, but I see it being a large impact. I see it having a large impact on our economy, not just in the US, like worldwide, through time. So
Okay. Okay,
yeah.
that's interesting. And you said about people have been buying a metaverse real estate properties. So can you
Yeah.
define what is it?
Yeah. So in the metaverse, you can actually purchase real estate. And to be honest, some of the real estate in the metaverse is more expensive than the real estate in the actual real world,
Oh,
which is
really?
yes. Yes.
Oh,
So like for instance, there's people buying like strip malls. There's people that are buying so all this stuff goes hand in hand. When you think about the metaverse, you think about crypto, you think about NFTs. So all this stuff is one big circle. People are placing their NFTs in the metaverse. So for instance, say there's a museum in the metaverse and people are placing their NFTs in the museum and people have to pay to get in the metaverse museum. And then the people that own the NFTs are getting a royalty off of the dollar amount that each person is paying. So it creates an ecosystem that it's super technological. So it's hard to explain, but it creates this ecosystem where you can have what do you call it? You can have basically you have ownership. It creates an ownership opportunity. It creates an opportunity to make money without being there, passive income opportunities. It also creates like a club environment. So when you talk about the metaverse, NFTs, it's owned like it's specific. If you own a specific NFT, you can have access to things that other people don't have that own that does not own that NFT. You know, so it's a big thing, but I can go deep into it. I don't want to get too complicated.
For me, it's like more very complicated to understand because I don't know why, but I'm not saying more growth in metaverse. I believe that why should people focus more on virtual world rather than actual world? Like it is being said that whatever we have been doing these days, let's say if we are communicating right now, it's a virtual, right? So we use Instagram, we use WhatsApp, everything is virtual. But see, it's I don't understand actually. I don't understand NFTs. I don't understand metaverse. I don't know where the industry is going.
Yeah, it's very hard to understand. It's a very complicated thing. Me, I was against it. I fought against it. I was giving backlash. I didn't like it. But so the problem is not us. I feel like I'm not sure how old you are, but I feel as if we're around the same age or in the same generation. We like, we want to touchy feel. We like relationships. So we're into like stocks and things like that we can, there's some type of quantifiable measurement, right? When it comes to the new age generation, the young people, they don't care about measurements. It's all about hype. So what has the most hype? So if I want to make sure that I'm keeping up with these trends that these younger generations, these 17 and 18-year-old millionaires are doing, I have to make sure I educated myself and learned about it. So that's why I'm focusing on educating myself, but I'm still going to continue to invest in the things I know, but I still want to know and have education about the metaverse and NFTs and all that. You know what I mean?
Yeah, and the industry will evolve, right? It's just the basic foundation of the industry.
Yep, exactly.
There is a lot more to consider.
Yep. There's one sector. There's many other sectors.
Yeah, exactly. And what do you think about NFTs? Like, is it wise to own an NFT or what kind of NFTs that we should consider buying?
Yeah. So NFT, for people that don't know, is non-fungible token. So basically, it gives you a sense of ownership. It's a JPEG. People say you can screenshot it, but there's code behind the JPEG. So code meaning there's a specific computer code that's behind each JPEG. So that's what makes it exclusive in the original JPEG. Even if you screenshot it, that's still not the original, right? But NFTs, to be honest, I don't own any NFTs. The reason being is because I don't like the uncertainty that comes around with it. And I do not like, so for instance, right now, there's a lot of influencers, celebrities that are promoting NFTs. And these people they're just paying these people maybe $20,000 to promote, $100,000 to promote, but it could be somebody that is a fraudulent person, but they're being paid by not a person, they're being paid by like just a code using crypto. And they have these major influencers promoting it when the influencers they're not even knowledgeable about the NFT. Exactly. So you have these rug pools going on with crypto and NFTs where people are putting their money in, and the owners, nobody knows who the owners are, but the owners, they take all the money out, and that's when it goes to zero. And then all these people are mad, and people had trust in it because large influencer or celebrity promoted it. So they thought it was a big next thing. So I don't own any NFTs at this point in time. I do think that if you have a high risk tolerance, you're young, you don't have any kids, you have some money to lose, then it's okay. And you still want to do your research. You want to make sure that you're investing in NFTs that's in the top 50, that has a lot of volume, and also that has a high. So they have Discord groups. A big thing with NFTs is they have these communities where they're they built these communities usually on Twitter and Discord, and you want to make sure that Discord group has a lot of activity. It has a lot of volume, it has a lot of people in it. So those are just some things that you can look at before you buy any NFT.
Actually, I asked you the question because I've read tons of articles where, as you just say, teenagers have been focusing a lot more on hype-based things, right?
Yeah.
So I've read articles where the teenagers and even the people aged from 20 to 30 have been making thousands of dollars each month by selling, buying and selling NFTs.
Buying and selling, exactly. Yep. There's a few metrics you need to know. If you understand those metrics, you might lose on some, but you'll win on most. So you just have to have the money, and then you have to know how to even buy. You have to know. So the thing about NFTs, it make it so complicated. You can't buy with cash. You have to buy with crypto. Depending on the network you're on, you can buy them on the Ethereum network, the Solana network, and a lot of people don't even know what Solana or Ethereum is. So it makes it non-accessible to especially a lot of, I don't want to say older investors, but people that are not as technological advanced as some of these younger investors. So that's where there's a gap in a lot of people in feeling comfortable and safe investing in NFTs and the metaverse and so forth.
Right. So we can say old school people are not, that much educated when it comes to NFTs.
Yeah, some of them are, but most of them are not, or they just remember a lot of old school investors don't trust these type of things.
Exactly. But I've seen Gary Vee promoting heavily on like different NFTs. Like you know Gary Vee, right? Gary Vaynerchuk.
Yeah. Yep.
Yeah, so in his Instagram and YouTube videos, you will see that he will keep talking about NFTs, buy NFTs. We will focus more on Metaverse. Gary Vaynerchuk.
Oh yeah. He's like a pioneer in it.
Right.
He's a pioneer in that industry, in this industry, I guess. Yeah.
Yeah. So that's why
he's a very innovator. He's a very innovative person. So he's always looking ahead. So that's why he thinks it's the future, because he's always looking for the newest trend. So that's why he was a private investor into, I think, like Facebook, and private investor into like a lot of these companies.
Like he was an angel investor of Uber, I guess.
Yep. Uber. So yeah.
So he focused more on, high risk, high return. That's why he keeps promoting NFTs and, crypto.
He has his own NFT as well. So he has his own.
Oh, is it so?
Yeah, he has his own collection called Friends. And it's very popular. And it's literally just a random like picture. It's like a bunch of like stick figures and stuff. But I mean, since he's a pioneer in it, people buy it, Yeah,
right.
Yeah. So
okay. So if we talk about like stocks, like in this uncertain time when there is a geopolitical crisis going on between the Russia and Ukraine, then we have another issue of hyperinflation. If the government raises interest rate, then there is a huge possibilities that the stock market will go down. So during this time of uncertainty in 2022 and in the next year too, what do you think about like investment? Like which stocks to consider? How can we stay conservative and focus on growth as well?
Yeah, good question. So once again, it depends on how old you are. It depends on where you are in your investment life, right? So if you don't have a high risk tolerance, or you're on the back end of your investment career, meaning you're about to retire, there's a lot of good investments that people forget about, right? They have bonds, which are old school. They have specific inflationary bonds, right? That keeps up with the inflation rate at least. So at the bare minimum, whatever inflation is, you're going to make that. So you're never going to lose money as long as the interest rates are higher. So they have specific bonds where it matches that. Those are cool for people that don't have as high as a risk tolerance. You also have dividend stocks, right? So the good thing about dividend stocks is that no matter what, you're going to make an income, or you're going to make some type of money off of owning that company, no matter the appreciation or the depreciation of the asset. So, but you have to be careful with dividend stocks, because sometimes people chase after the dividend yield percentage, and sometimes a too high dividend yield percentage could be a red flag. So you want to make sure you're investing in quality dividend stocks. That's going to be one thing. And then consumer staples is always going to be good during these crisis times. So when I say consumer staples, that's going to be your necessity companies. So like your toothpaste, your hair products, your your things like that. Anytime you're investing in comfort food, so alcoholic companies that produce alcohol during this time when it's depressing times, those are always going to go up. Yeah, Pepsi, Coca-Cola, people are always going to buy those things no matter if the world is good or bad. And also you can always, inflation does mess with tech companies, because when inflation increases and interest rates increases, the manufacturing cost goes up on all of their products. So tech is usually going to get hit the hardest if inflation gets super high and if interest rates get super high. But there's still going to be some like blue chip techs that I like, which are Microsoft and Apple. Those are the two biggest blue chip stocks, blue chip tech stocks, because they're like growth. They're like value and growth companies, because they're still growing at a high rate. At the same time, they've been around for over 20 plus years. They've been successful for all 20 plus years. They also both pay a dividend, and they also have positive cash flow and free cash flow sticking around. So that's why I like those two for tech stocks.
Yeah, there is no doubt that Microsoft and Apple have been doing great in their industry. Like for example, Apple, if you see the profit of Apple, it's more than 100 billion, which is really outstanding.
Exactly. I'm not worried about anything owning Apple, because no matter what, they can pay for any debt they have, even without making money for a long time. And the ecosystem is just so large. Everybody I know, for the most part, 90% of people I know has an iPhone, a MacBook, AirPods, an Apple Watch. So they created this ecosystem where not only do they have subscription-based businesses, they have products, they have services. It's almost to me like impossible to break at this time. Of course, anything through time can go under, but at the next 10 years, I only see it increasing in at least as a company, growing as a company. The price, the stock price has nothing to do with the company.
Right. Agree. It's a too big to fail company, we can say.
Yeah, exactly.
Yeah, and you said about like alcohol-based companies. So I've been observing here in Canada that people consume like beer, alcohol, and this kind of products heavily. So for long-term investment perspective, if I consider buying like alcohol-based stocks, what are the companies that I should consider?
Yeah, so they have I believe it's Constellation brand. Constellation brand is the company. They own several different, not only hard alcohols, but they own beers as well. And then also they own a portion of Canopy Growth, which is it's one of the largest marijuana stocks as well. So they have their foot. It's a diverse play, because not only do they own hard alcohols like vodkas and so forth. They own a vodka. They also own beers, and then they also have their foot in Canopy Growth. So it's a safer option opposed to just going with a company that only makes alcohol, or only makes beer, or only makes hard liquor. So I like that company. I think it's Constellation Brands, or I can't think of the exact name, but I believe it's that. And I believe the ticker is just C. I believe it's C. The ticker is C. And I like that company. I don't own it, but I do like it. I do like it if I had to invest in one of those types of companies.
Right. So after completing this podcast, feel free to send me some of the names, some name of the companies alcohol based, so that I can do some research. And I believe that profits should be really high of these companies, because the consumption is massive.
Yes. Yep. Super high, especially during depression times, or even in good times. People go out every weekend. So there's bars in every city, town that you can think of. So, yeah.
Right. In winter, if people want to stay warm, they consume alcohol, and in summer, if they want to celebrate and they want to chill, they consume alcohol. So it's a evergreen industry.
Yep, it's part of everything. So that's why I always say, no matter the climate of the world, that's always going to sell, always. So,
right.
Yeah.
So finally, if we talk about like student debt, I have read like articles of CNBC where it was mentioned that government is planning to forgive student loan worth more than $1 trillion. So is it going to happen really?
This is something I used to talk about all the time when I first started my personal finance career. But student loans, the average person has over $35,000 in student loan debt, right? So the bad thing with that is they keep talking about student loan forgiveness, but student loan forgiveness is only at this point in time, it's not happened for many people. The student loan forgiveness that has happened are for specific people, right? So it's going to be somebody that went to a college that closed down. And it's not even all colleges that close down. It's specific colleges. There's going to be for people that are work in the what we call public, what is it called? Public sector. So like teachers, doctors, I believe like teachers and doctors are two I know for sure. So you have to basically pay on your student loan. You have to pay like a fixed rate for over 10 years for it to even be forgiven. If you're a teacher or if you're a doctor, you work in that public sector space. There's a couple of other industries that you can work in to be included in that program. But that student loan forgiveness or that program, if it does roll out, it's not going to roll out anytime this year. And I really don't believe it's going to roll out anytime next year, to be honest, if it even does roll out. So, it's just in order for that to happen, like the only people that's going to get hurt are the people that's giving out these student loans. Because then what's going to happen to because these student loans in the United States is given out by the U.S. Department of Education, which is a government-backed entity. So who's going to pay that money back? It's going to be printing more money. We got to print more money, which it feels good to have your student loans paid back, but then everybody else is going to pay for your mistake because we got to pay more in inflation or in interest rates or another. So it
indirectly means that the US taxpayers will take care of, the forgiveness of student loan.
So that's another option. They can charge us extra tax, and that's how I know it's not going to happen because we have not gotten charged any type of extra tax to pay for any type of student loan. So that's why I don't think they're going to implement that anytime soon. If they do, it's going to be in the next 2 years. That's what I personally think. So,
and if they do, there would be change in government, right? Because it's totally against. People would not prefer to have it like an extra tax.
They might, because remember, it's I believe over 70% of people have student loan debt, and everybody.
Seriously?
And everybody that has it, or the average student loan debt has over 35,000 in debt. So I think the only people that's going to fight against it are the people that don't have any student loan debt or they paid it off.
Right.
But the people that have it, they probably won't fight because it's going to be so small. It's going to be probably $20 out of every check per person on a yearly basis. You have several millions of people. It'll add up. But that's why with all these rates, that's why I do like crypto and Bitcoin, because it holds its value opposed to our fiat currency, which has no value. So that's why I do like Bitcoin. I don't like crypto as a whole, but that's why I do like coins that have a limited supply, such as Bitcoin. So.
Right. Okay, I got it. And another thing, sorry, I'm just excited to know about your opinion, right? So what are your thoughts on Biden administration? Like how
what administration?
Joe Biden administration, like
my thoughts.
Presidency.
To be honest, I'm not a big politics person. The reason being is because no matter who's in office, there's going to be something. There's going to be things that we don't like. There's going to be things that we might like. So I don't really put too much energy and effort. I understand like there's things where I can make a difference and so forth. But in reality, no matter who's the president, if I'm not taking care of myself, my priorities, my responsibilities, then I'm going under. You know what I mean? Especially as a 100% entrepreneur, I don't have a company to pay my bills. So no matter who's in office, I got to figure out a plan regardless. So I'm not super big into politics, to be honest.
But for let's say, for instance, if you are an entrepreneur and self-employed, and if the X government would increase the tax on you, then you would say that, hey, this government is not good, right?
Yes, I'm also a strategist when it comes to finance as a whole. So not just stocks, not just credit, but also taxes. So there's ways that you can mitigate and you can defer taxes. There's literally ways you can defer taxes for a lifetime legally. So through getting a trust. So and like I said, I don't want to go too deep into that because that's complicated. But yeah, there's ways you can get around paying taxes, or if you don't pay them, you can defer them for a lifetime, and then your kids can defer them, and then their kids can defer them. So so that's how we create our own bank, and basically we create generational wealth is by using some of these insurance, we call it infinite banking strategies, which is through life insurance, or we use trust to defer our taxes and do different things like that. So
And yeah, well, the individuals in the United States do this, right?
Yeah.
To
Yeah.
defer taxes. Like I've seen uh, like many videos where it was clearly mentioned that Jeff Bezos pays $0 tax.
Exactly. So there's
Yeah.
multiple different ways. He does it through trust as well. He has charitable trust, so he donates money to a charitable trust that is owned by maybe one of his kids or owned by
Amazon
some
itself.
yeah, Amazon itself, because
Yeah.
he can't own the charity, but
Right.
Amazon can own the charity, which is his company. So you
Yeah.
can like recycle this money to where you can put it in an annuity, and then the
Right.
annuity, you get tax breaks on the annuity for like, there's so many strategies, and that's where it gets super complicated. And that's where you have to be like almost like a nerd to like get to this level. You know what I mean?
Right. I got
Yeah.
it.
Yeah.
So finally, is there anything that you want to ask me?
No, I mean, at this point in time, what is your, I guess, investment outlook? Are you like dollar cost averaging? Are you staying away from the market? Are you just letting whatever you have ride? What is your strategies at this time, I guess?
Yeah, actually, I'm not focusing more on investing heavily these days. As you just said, dollar cost averaging.
Yeah.
The focus is now on buying stocks and mutual funds consistently on, for
Okay.
example, month on month, so that
Yeah.
even when the stock is low, I prefer to buy. Even when the stock is high, I prefer to buy.
Exactly.
So, and the fundamentals remains the same, right? If the company is going at the right direction, if the financials are right, then there is no need to worry. Even if there is a panic in the market,
Hey,
like any crisis, we don't care, right? So in the
exactly.
long run, 5 years, 10 years, the market will definitely recover, and the stock will also outperform. So that's the strategy, actually.
Cool. Yeah, that's what a lot of people don't understand is they
Right.
emotional invest and they sell off really quickly,
Right.
but you're investing in quality companies, the market's
Right.
always going to rebound, especially with good companies. You have nothing to worry about. You're just buying at a discount. So
Hmm.
that's what I like about this investing for long term
Right.
investing. You know what I mean?
Right. Yeah. And I've been also planning to cut down my some of my investments in actively managed mutual funds to index funds.
Okay.
So for example, if the actively managed mutual funds is not beating the benchmark, then it makes no sense to stay
Exactly.
invested.
It makes no sense. It's just you're paying actively managed, you're paying fees for somebody to invest for you. But if there's an index fund that's it's investing for you and there's no extra fees associated, then essentially you're making more money because you're not paying those additional fees, which are going to
Right.
compound over time if you keep your money in there. So yeah, I think that's a good strategy, man. The index funds, ETFs, keep it simple. People
Yeah.
always try to get fancy, keep it boring, keep it simple. You'll be fine. Yeah, I mean,
And yes, considering the geopolitical scenario, I've been also focusing more on like gold ETFs, where when there is a crisis, when there is an economic crisis, the gold price increases,
oh, the
right?
gold
So
ETF. Okay, yeah,
yeah.
yeah. People get scared and run to the gold for safety.
Yeah, so for the safety purpose, we can say that the gold can help a lot to,
Yep.
balance the portfolio.
Yep, for sure. For
Yeah,
sure.
gold and debt funds, like government bonds and all these areas are,
Yeah.
can offer, like, inflation can offer the returns that
Yep.
inflation is. So I should say it's a like 0% investment, 0% return. But as I just said, when in economic downturn, the gold always outperform.
Yep. Yep.
So that's the purpose.
Exactly. It's good,
Right.
man. Yeah, it's good strategy. Good strategy.
Yeah, and
Oh,
and also focusing, and I don't know why, but recently I'm saying that I've been observing that I should go for dividend based stocks to
yep.
reduce my volatility, like
Yep. Yep. Yep.
actually it is being observed that dividend stocks are less volatile compared to growth stocks.
Yeah, yeah, typically, yeah, because dividends are those are the income plays, which are usually like more. There's less volatile. It's not as much movement. People are not trading dividend stocks as
Right.
often, so you don't have to worry about as much validity. You're not gonna the increase in price is not going to be as high, but
Yeah,
typically
exactly.
it still can, but most times it's not. But you still have that safety net in times like this. So
Right. So
yeah,
but in the long run it grows.
yeah, yeah. Oh yeah, most
Yeah.
definitely. Most definitely. Yeah, you can look at your energy sectors, your usually energy is going to have pretty high dividends.
Yeah.
There's a lot REITs if you want to get into REITs, those are different, the real estate investment trust, but
Mhm.
the energy and those type of the solar, those pay really high dividends typically. So
Have you been investing in green energy sector?
I have not. I have not. I have not. So even though I'm not a super risky person, I still have a decent risk tolerance, meaning I like to, if I'm going to invest in something like that, I did have Dominion, which is an energy company, but it wasn't a green energy company though.
Okay.
But outside of that, yeah, I'm not actually investing in any green energy or anything like that, or solar or anything.
And is there any big company or rising company in the United States which focus on
For
because
green
which focus,
energy?
yep, yep.
Um, I don't know. I don't look too much. I don't invest in those, so I don't look too much into it. Yeah, I don't. I'm not gonna even sit here and lie. I don't look into green energy
Right.
companies. That's something that's not my expertise, so I don't really look at those type of companies, to be honest.
Yep, yep. Because see, in India, there is a massive, people are really bullish about green energy sector, and
Yeah, I
there
can
are
understand.
many companies which have raised millions and billions of dollars
Oh wow.
for the industry, and the government is also pushing the companies to actively start working on the green energy sector. So that's
Oh
why I
yeah.
ask you this.
Yeah, I'm sure in India, I'm sure they are, but I mean here it's not a. I know in California, like for instance, Tesla, you can actually consider, I don't want to say green energy, but in California, Joe Biden or the president cabinet, whatever the case may be, they are providing a lot of tax write-offs and discounts if you own an electric vehicle in the state of
Hmm.
California. So, like
Right.
for instance, yeah, they're giving like huge tax write-offs, they're giving huge discounts on vehicles if you do own. So they are promoting that in certain states like California, but it's not U.S. based at this point in time.
Okay, okay, got it.
Yeah.
So, Sheldon, thank you so much for
Yeah.
coming to the show again. It's the second
Sure.
time we are meeting, and it's a great meeting you. We had a great talk regarding finance, investment, like the new technologies like Metaverse,
Oh,
NFTs, and we'll talk soon about the new
yeah,
topics regarding technology, investments, and all.
most definitely.
So, yeah, thank you so much for coming, man.
Yeah, thanks for having me, man. It was fun.